All right, let's jump right in and talk about one of the most watched IPOs to hit the market in a long time, the National Securities Depository Ltd, or NSDL. This company is, quite literally, part of the invisible foundation of India's entire financial system. And now you've got a chance to own a piece of it. So, what are the key things you absolutely need to know? Okay, here's how we're going to break it all down. First, we'll take a quick trip back in time to understand the problem NSDL was created to solve. Then, we'll dive into the 5 key things: its massive competitive advantage, the battle for everyday investors, where its money really comes from, and finally, we'll look at the IPO details and its price tag. You know, to really appreciate what NSDL does, you have to understand what things were like before it existed. And for that, we need to go back to the Indian stock market of the 1990s. And believe me, it was the Wild West. I'm serious. Go ask them. I bet you'll hear some pretty crazy stories about brokers shouting on chaotic trading floors and then waiting weeks, sometimes months, for a physical piece of paper, a share certificate, to show up in the mail. This paper-based system wasn't just slow, it was incredibly risky. It was a playground for scammers like Harshad Mehta, filled with forged share certificates and mail theft. For the average person, investing just felt way too dangerous. So, the government knew it had a massive problem on its hands. They had to fix it. And instead of just building a giant warehouse to store all that paper, they went with a much bolder idea. Let's just get rid of the paper altogether. And just like that, in 1996, NSDL was born. It was revolutionary. India became the very first country to dematerialize its securities, basically turning all that messy paper into secure digital records. For a couple of years, NSDL had the whole market to itself, until its only rival, CDSL, came along, which created the two-player system we still have today. In those early days, NSDL became the go-to partner for all the heavy hitters, the banks, the big mutual funds, insurance giants like LIC. It laid down this incredibly powerful foundation that really defines its business even now. Okay, that brings us to the first really important thing you need to know about NSDL today: its unbelievable scale. It really all boils down to one just mind-blowing number: 464 trillion rupees. I'll say it again, trillion. As of this March, that's the total value of every stock, bond, and security sitting in NSDL's demat accounts. It's a number that's almost hard to even wrap your head around. And this chart just lays it out perfectly. NSDL holds over 6 times the asset value that its only competitor, CDSL. This is what you call a moat. It's a huge competitive advantage built on decades of trust with those big institutional clients, the ones with the deepest pocket. But holding the most valuable assets is only half the picture. And that brings us to our second key point. There's a huge race happening right now for individual, everyday investors. And in this race, things look totally different. See, while NSDL was locking down all the big fish, its competitor, CDSL, went after a different prize. It became the default choice for all the new age discount brokers like Zerodha and Upstocks. So when the pandemic hit and millions of new retail investors flooded the market, it was CDSL that caught that wave. And you can see the effect right here. Even though NSDL holds more assets, its share of the actual transactions has been slipping. It's gone from 81% a few years back down to 66% today, all because CDSL is winning the high-volume retail game. And hey, this isn't just my analysis. This quote is pulled directly from NSDL's own IPO filings. They are openly admitting that they've been losing ground to the fintech brokers. They know it's a challenge. So that leads us to our third key point, the money. With this competitive pressure from the retail side, where does NSDL's profit actually come from? Well, the answer is pretty surprising. Now, if you just look at revenue, you'd think, okay, this looks pretty well diversified. Half their revenue comes from their payments bank subsidiary. The other big chunk, 43%, comes from their main depository business. Seems balanced, right? But, and this is a huge but, when you look at profits, the story completely flips. That banking business that brings in half the revenue, it contributes a measly 1% to the company's bottom line. Meanwhile, the old-school depository business is an absolute profit machine, churning out 91% of the total profit. This table right here tells you exactly why. It all comes down to profit margins. The depository business runs at a beautiful 50% margin. The payments bank, it's scraping by on a razor-thin 0.5%. So the big takeaway is this. If you're investing in NSDL, you're really making a bet on its core, high-profit depository business. Okay, let's get to the IPO itself. This is our fourth point, and it's a really important one. What is the actual purpose of this public offering? The most crucial thing to understand is that this is a 100% offer for sale, or OFS. That means NSDL, the company, isn't raising any new cash. Not a single rupee from this IPO is going into NSDL's bank account. This is purely about its early investors, like IDBI Bank and the NSE, selling off a piece of their stake to the public. It's an exit for them. Which brings us to our fifth and final point, the price. So, on the surface, NSDL's IPO looks like a pretty good deal. It's coming in at a price-to-earnings ratio of about 47. Its only competitor, CDSL, is trading at a much higher PE of 68. So, it's cheaper. Seems like a no-brainer, right? Well, not so fast. As always, you've got to peel back the layers. That valuation gap isn't quite as straightforward as it seems. Just remember what you're buying. Part of NSDL's valuation includes that very low-profit banking arm. CDSL, on the other hand, is a pure-play bet on the depository business, and it's totally focused on that high-growth retail market. When you see it that way, with CDSL being a leaner machine built for speed, the price difference starts to make a bit more sense. So at the end of the day, this IPO really boils down to a fascinating choice. Are you betting on the original pioneer, the institutional giant with that massive, unshakable moat of assets? Or are you backing the challenger, the nimble, retail-focused player that's leaner and growing faster where the action is? That's the real question you have to ask yourself.